Okay, hi, this is Brent from TradeGuild.blogspot.com, and it is 27th, I think. So it's pretty bad, ugly day. I'm not going to go into how the market was getting ahead of itself. I think you've probably heard enough of that by now. I will say that we've been looking at this probably since the beginning of the year, maybe a little bit before. There's been a lot of signs, a lot of indications that this was coming. So if you read the blog, it shouldn't have caught you off guard. Anyway, I'm going to do something a little different to start this video out. I have the Hemscott Industry Groups. This is a company that puts together industry groupings for Telechart and for the financial industry at large. And they're just all different industry groups, and I've got them sorted here on these tabs for all you new Telechart users. You have these different tabs up here that you can put all kinds of different information. You program them any way you want. Anyway, I have them for like for 1%, that would be like the leaders. It'll list the leaders for the day as far as what groups did the best, and in descending order, and there's for 5 days, for 10 days, for 21 days, so on and so forth. So anyway, I'm going to sort them for one day, and we're going to hit the home key, which will take us to the top of the list. So we start out silver down 8%, steel and iron down 7%. There's 239 groups here, so I'm not going to go through the whole thing, but just keep your eye on this column. This is today. I just want to show you something. Green obviously would be up, red would be down. So here we go. I'm just going to scroll down. Here we're at the 4% losses, 3% losses. Okay, we're almost done. And there you have it. So every single industry group today in the red. So what's behind all this? Of course, we had the worst sell-off in 10 years in the Shanghai market. We had the assassination attempt on Dick Cheney. We had the weak durable goods report, and some subprime lending concerns. And as you know, the market's been overdue. Crash, boom, bang, that's my wife. The market's been overdue for a correction. As she apologizes. Okay, so this is the biggest decline we've had since September 11th. Honey, are you okay?
Yeah.
Okay. All 30 Dow components were in the red. In S&P industry groupings, there was only one out of 147 that closed in the green. So it was just a horribly nasty day. And what I'm going to do is I'm just going to switch over this chart. Just give me a second. Okay, so I've got my chart up here, and I had a request on the tag board to take a look at the VIX. Okay, so here's the VIX, which is the CBOE Market Volatility Index, and basically it measures fear and complacency in the market, or that's what we use it for. So what you would have is a low reading down in this area would indicate complacency, and a high reading would indicate fear. Now, the VIX does have an inverse relationship with the market, more or less. So when you see the VIX heading up, generally the market would be heading down, and vice versa. I have a pretty easy way to show you this. And here's the Qs in blue and the VIX in white. So you can see a spike in the VIX is accompanying a move down in the Qs. So typically what you'll see is extremes in the VIX typically will produce either a rally or a decline, depending on if it's a spike up or a spike down. If we go back and look in the not so distant past, we actually had this spike over here in June, and a month or so later we had this big rally that kicked off. So it doesn't necessarily mean that there's going to be a huge rally tomorrow. It doesn't mean there's going to be anything. I mean, it doesn't have to do anything if it doesn't want to. Just typically that is what we see in the VIX. So there's a lot of questions on the tag board as to what's going to happen with the market tomorrow. Is it going to rally? Is it going to drop more? And it's anybody's guess. Typically if it's a bear move, you're going to see some follow through for a couple of days. Sometimes we get these big oversold panics, and we get a pop, but there's just no way really to say. So the one thing you have to remember is the market has a pendulum effect to it. It overreacts one way and then it overreacts another way. Eventually it returns to the mean, and that's why we use moving averages and Bollinger Bands and whatnot. But the market is emotional, and it overreacts. So let's take a look at a few charts. I'm going to pull up the Dow Jones. Actually, let me pull up the diamonds, because we can look at an intraday chart with 3C. So anyway, here's the diamonds. Now, the Dow plunged 250 points in 4 minutes today around 3 p.m. Let's take a quick look at that. Here's 3 p.m. in here, so we had this big plunge, and it popped up a little bit and could not hold on to those gains. So a couple of things that also were in effect in the market today. We had record volume on the New York Stock Exchange. Like I said, all the industry groups and HIMSCOT there were red, and the S&P, only one out of 147 was green. Bonds did great today. A lot of ETFs, bond ETFs, were really flying high today. So bond investors, I'm sure, were very happy with today's action. As far as tonight goes, the S&P futures right now are 5.8 points below fair value. The NASDAQ 10.4 points below fair value. So let's get into some other charts here. Let's actually start with, I'm a little disorganized here. I haven't done a video in a while, but let's start with the spiders, and let's take a look at the daily chart there. You can see they were down 3.91% in the spiders on big volume. And what I want to show you before I run out of time on this video is my 3C indicator. If you've been around the blog for the last month or so, you've probably heard a lot about 3C. It's a custom cumulative indicator that I wrote using Telechart's custom feature. They have 4 different types of indicators you can write custom. And I use this. It doesn't actually signal accumulation and distribution as far as net values, but it is looking at the underlying action of TSV, in this case 38, and it's making some assessments based on that, and it works very good. Actually, I think it works better than TSV itself. So part of the warning that I've been trumpeting for the last several months comes directly from this 3C indicator. And if we take a look, you can see as the stock, or as the index was rallying, 3C was chugging along with it, making higher highs and higher lows. And then we get into the December time frame, and all of a sudden it's not making a higher high there. And in fact, after this consolidation is over and it starts moving up again, we see a really bad negative divergence put in there. So it's rallied up again. You can see it had reached this level before today, and that gives us a big negative divergence over here. So stock price is going up, the indicator is going down, and that's that negative divergence that we talk about. If we take a look at a couple other things, I want to show you a couple different time frames on this. We're going to take a look at the hourly, and this is a really good example of how 3C works. We have this relative price level over here, and then we had a little bit of a higher high. This did not make a higher high, so this rally went nowhere, pulled back over here, and it made this low over here. So at this point, 3C is actually in gear with price, so we don't have any edge. It's just rolling along with price. So over here we make this higher high, and you can see this high is much higher than this high, but 3C has not moved up. I'm out of time. I'm going to come right back.